How do you feel about free money? In this video, I'm going to show you the closest thing to it. I'm going to show you how to generate passive income month after month, every month. And it's by selling options. I know what you're probably saying. Darren, really? Come on. No. By the end of this video, you're going to know everything you need to know about selling options in order to create passive income month after month. Please be sure and hit that like and subscribe button down below. It helps to get the video out to more people. Also, be sure and download the free options workshop in the link below as well. It talks about the two main benefits of trading options over buying stocks. There's also a paid course if you want to dig into the options a little bit deeper. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. It's a zero commission online trading platform and brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. In this video, I'm going to show you my strategy for selling options and collecting premium month after month. I'm going to show you how I select my strike prices, how I close the trades, and continue to generate new trades in the following month. By the end of this video, I will share with you my entire strategy and you'll know how to do the same. First off, we've got to understand the difference between buying and selling options. I know you may know in general the difference. However, there's one main difference between buying and selling options that we've got to really be aware of. Buying options and selling options are the opposite. Great, Darren. Yeah, I think we knew that. Well, when you buy options, you pay a premium, and when you sell options, you collect a premium. The money goes from the buyer of the option to the seller of the option, and only one can win because the option is either going to expire in the money or out of the money. The buyer of the option is hoping that the option expires in the money, and the seller is hoping that the option expires out of the money. Here's the interesting part though. The chances of the stock expiring out of the money are much higher than the chances of the stock expiring in the money. So which way do you think is the better way to profit month after month? Buying or selling options? Well, definitely selling options. And why? Well, math. So if you've always tried buying options and you're seeing that you're losing money month after month, well, the seller's collecting that money and laughing all the way to the bank. All right, let's jump into the option trading platform. This is Tastytrade. There's a link down below. I use Tastytrade, which is great for trading options as well as Moomoo. Let's go to the trade page right here, and then let's click on 33 days to expiration. I like to go between 30 and 45 days. This takes us to the September 20 option chain. Just click on it, open it up, and we can see MU Micron is trading at 107 right now. So if you look at the chart, it's starting to trend up. It's way undervalued. I think my target price for Micron is 160. So I expect it to go way up. So I'm going to go ahead and sell a put in Micron. And if it drops and I put the 100 shares of stock, I'm okay with that. But I'm going to click here on the bid on the 100 to sell the 250 put option. Now you can see there's a 74% probability of profit. That's because we're going out of the money. We're at the 100 and the stock price is 107 right now. So we're utilizing $1,367 only in buying power, and that's $2.50. Actually, the mid price $2.53 out of $13.67. That's a huge upside potential for with a 74% chance. So that's basically 7.4 times out of 10 we're going to be profitable on this trade. If we go to the curve mode and look at it, you can see the stock can even move down all the way down here to the 97, and we're still profitable and still keep this $253 upon placing this trade. So that's why I like selling options versus buying options. Now, if I were to flip this, swap and buy, we only make money if it goes down below the 97. So again, our probability of profit is only 25%. So much lower probability of profit. Sure, we can make more if it drops way down, but I don't think Micron's going to. So I would rather take the easy play and go ahead and sell the options, take the less money, but still $253 on $1,367 invested is a very big ROI. Let's actually calculate what that is. If I go over here and take 253 divided by 1367, 253 divided by 1367 equals, that's an 18.5% monthly return. So 18.5 times 12 months, yeah, huge, 222% annual return. So you get the reason why we sell options. So the two key takeaways from this example are: when we sell options, we collect premium. And when we sell options, we have a much higher probability of profit than we would if we were to buy them. Now, we can either sell calls or we can sell puts. If we sell puts, we will be forced, if it expires in the money, if the option expires in the money, we will be forced to buy 100 shares of the stock at that strike price. If we sell calls, we will be forced to sell 100 shares of the stock at the strike price. So when we sell puts, we want the stock price to stay above and expire above our strike price. When we sell calls, we want the stock price to stay below our strike price. In either case, as long as it expires out of the money, so above the put price or below the call price, then we keep all of the premium that we collected up front. Now, when buying options or buying stock, you want to buy low and sell high. So what do you think you want to do when you sell options? Yeah, you want to sell the option at a high price and then buy it back at a lower price. That's how we make monthly income month after month. And we collect more in premium if the IVR, or the implied volatility rating, of a particular stock is high when we place the trade. That's when we collect the most premium. Now, in my experience, in selling options, the return on investment is very high. You saw, just based upon the trade that we just made, we had a huge ROI. However, a more realistic monthly ROI is somewhere around the 3 to 4% range. Even 2% is not bad. The average stock market return for the S&P 500 is about 10% per year. Some years more, some years less. So if you can do 2% per month, that's 24%. 4% is 48%. So you can see how the numbers can move up quickly. So I like to place the trades 30 to 45 days to expiration, and then I will look to close and roll to the next month at about the 1 to 2 week mark, when there's 7 to 14 days to expiration left. Then I'll take that and roll to the next month and collect additional premium. That's how we make passive income month after month, selling options on both sides. The put side for stocks that are undervalued and we expect to move up, and the call side for stocks that we believe are at the top end of the range and might likely come down. Now let's take a look at selling a call option. We will look at Chewy, CHWY is the ticker symbol. It's trading at $27.07, and the IV rank is 49, so high IV rank. We'll go to the same September 20th option chain that's 33 days to expiration, and we'll open that up, and then we will go down. We're at 27, so we're going to go down to the 30 call option, and we're going to click on the bid to sell the call option. The calls are on the left, the puts are on the right. So we click on the 30 call, and we'll go to the middle, $1.36. Now we can see 1,076 is the buying power, and we are collecting $136. So if we do the math on that, we can take the 136.36 divided by 1076 equals 12% monthly return times 12 months, 151% return. So this is how we can sell a call option. And you can see there's been a run up in the stock recently, and there seems to be some resistance here. So not a bad time to sell a call. And if you own 100 shares of stock, it's what's called a covered call. So you can sell a call against it and collect that monthly premium. But we're on the table mode now. Now we can go to the curve mode, and you can see we're at 27. The stock can move up all the way up here to 30, and we still keep that $136 premium. So we can do this month after month and roll, with a week or 2 weeks left. We hit review and send, and we place the trade. Also note that this has a 76% probability of profit due to the current stock price being quite a bit below the 30 call strike price. My strategy for selling put and call options is as follows. So I sell put options, call options, put credit spreads, call credit spreads. Those are other forms of selling options, iron condors, fancy things like that. You can learn about those in the videos that I have. Check them out. However, it really comes down to just selling puts and calls overall. And the way that you make money doing that, studies have shown that going about the 25 delta, which gives you a 75% probability of profit. So 75 to 80 is really the sweet spot. And then going out 30 to 45 days to expiration, and then closing with about 1 to 2 weeks left. So you're collecting that premium decay over time, and you can do that month after month. All right, guys, be sure and download the free options workshop in the link below. Remember to hit like and subscribe. Join Mumu, get your 15 free stocks. Leave a comment, ask a question. I answer every one. Let me know what you're trading. Thanks for watching. I'll see you in the next one.